Beautiful day again here in Astoria. I mean, it's the middle of October. Typically, the weather in October is really bad, where you have a lot of rain and it's cold and, it's getting dreary and everybody is just like not excited about the weather. But right now, we got killer weather, so everybody's really excited about it. Pretty cool. Anyhow, thought I would give you guys a little bit of the lumber update today. I know how much you guys love lumber update videos. Following lumber is a really good indicator for what's going on inside of the economy, especially when it comes to like manufacturing or just kind of any of the manufacturing industries out there. If you follow lumber and the things that are going on within the lumber industry, it's kind of like telling of what's going to happen throughout the rest of the manufacturing that's going on out there. And we have had some crazy price moves in lumber over the last couple of years, but just recently we have seen lumber prices come down, and they've come down quite dramatically. The main reason that we have seen this is, well, because the home builder sentiment has gone pretty much into the toilet, and there's not a lot of excitement going into the new construction market. And so without this demand for new construction, or at least a heightened demand for new construction, then the idea of lumber prices going up is really not the leading indicator, I guess to say. Like if you're watching lumber go up, then you would know that there's at least some kind of demand for new construction out there. But we're not seeing that. What we have seen is lumber hit the low of around 450 per thousand. It did drop a little bit below that, and it's now sitting around 500 per thousand. So 500 per thousand is a very normal price for, going back to 2018, even 17. 500 per thousand was a price that we had experienced back, prior to the pandemic. So the lumber prices have dropped dramatically. Now, inventory is tightening up. This is something that, we had talked about. I had actually noticed that some of the treated deck boards that I had typically would order in once a week had come up in short supply, where I just simply could not get them. And that was my first indicator of there being a lumber shortage coming into the future back, in 2019. When we started seeing the inventory levels dropping, and then in 2020, we actually saw it disappear. But that was one of the indicators that I saw, was that there was issues within the pressure treated market. So saw that again. Today I got my supply of 2x6 decking material in, so there has come some onto availability. And again, like in the Doug fir, kind of the same experience. We had a couple of units that needed to be replaced, like I think it was a 2x6 16, and had trouble locating a unit to send down. Now, eventually we did get it, and it didn't take very long, maybe 5 days or so from the time that we did actually place the order to the time we got it. But usually it's a very quick arrival, like you can order and get it right away. So there is some hiccups, some issues taking place within the lumber industry. But they do seem to be working themselves through. Things are becoming a little bit more available. There's less issues with like failure to actually acquire material. Like for example, 5/4x4 trim material is something I had talked about quite a bit. This 5/4x4 like primed trim, finger jointed, very popular product for siding, and it had come up in short supply where we just couldn't get it. And then when we did order it, we ordered like, 50 pieces or something like that. And they said, well, because, we have to make sure that everybody gets some, instead of the 50 pieces, you're only getting 30. And so we started like increasing our orders. We went from 50 to like, 100 pieces, so that we could get like in the 50 pieces that we were hoping for or whatever. And that was really where the problem started to manifest itself within the industry, because so many people were over ordering, right, to try and make up for the allocations that were taking place, that it showed this overwhelming consumer demand. And now I saw it blatantly inside of that 5/4 trim. And we saw that take place throughout a lot of parts within the industries, within the market. But right now, with that same 5/4 trim, although we got a bunch in, it all went out. Like today we got a bunch of it in, but so many people were waiting for it to come in that as soon as it hit the ground, it all went out. Like within a few hours, it was all sold. So that's kind of the same scenario that we find, within a lot of other things. Siding, for example, fiber cement siding was very difficult to source out there for the longest time. I mean, it was just like there was no trim, there was no siding, it was no lead times. We just didn't know when we were going to get it. And now, like we have a yard full of fiber, the the cement fiber cement siding, and then also my retail vendors, or gosh, what am I trying to say? My wholesale vendors who sell to retail, they are stocked up on it too. So I don't think there's any shortage of this siding any longer. All right, wanted to read to you the letter that I get. A lot of you know that I get a updated email once a week. Kind of lets me know what's going on within the different industries out there. Hey, thank you, Matt. Thank you for the $10, man. Here, I'll come back and read your question here in just a second. But I thought I'd give you guys this lumber update with the lumber letter and let you know what's kind of going on, across the country there. I'm going to be out here for probably about another 40 minutes or so, and we'll talk about all things economics, housing, whatever we want to talk about, right? All right, so first thing on the list here, OSB. OSB sales were mixed this week. Several large mills continue to ship late, including GP's Ontario mill. LP's Clark County, Alabama mill had a fire and will be down for a week or two. So OSB, although is becoming much more in supply, I could only assume with the things that are taking place in Florida and with these mills having issues that we're probably not going to see the OSB prices coming down, but either hold steady or it might even tick up a little bit during this time. Fir plywood sales were sporadic at best, as a conservative tone still sets the stage. Producers firmed on half-inch 4-ply CDX or offered very little siding cost as the main casual factor. Most filed at conservative rates only when necessary and expected prompt shipments. So it sounds to me like nobody's really excited about loading up on the CDX and willing to just buy only what they need to maybe take advantage of some downside pricing. Anyway, that's kind of what I got out of that. The Southern Yellow Pine plywood we saw and by the way, I'm reading this for the first time right now. I haven't read this yet. So we saw as much inquiry into the Southern Yellow Pine plywood as we've seen in the last month. It's definitely been a major upswing in activity, with many different products within the category being quoted. Follow-through has been limited, but there is a feeling that inventories are just as limited, that purchasers are looking for reasons to jump in. If the OSB and plywood get a little bit positive pricing this week, expect plywood purchases in the next week to increase. Yeah, so it sounds like the demand for plywood might actually pick up next week with the lower prices that are existing right now. But we'll see. That's in the Southern Yellow Pine. The first one we were talking about was the fir plywood. Okay, going into lumber. Western Spruce Pine Fir. The Western Spruce mills had a good week moving off production and firming prices. Order files for most mills are late October to early November. Distribution sales were steady as buyers looked at filling in immediate needs. Eastern Spruce Pine Fir, more of the same as last week. Buyers fear low prices and buy only as needed. Secondaries with quick shipping wood and mills with prompt loadings get the most action. If you are going to need a mill direct shipment, get in touch. All right. Southern pine, all zones. The pine market continues to rise in all widths besides 2x4s. Cautious buying of 2x4s has caused the 2x4 price to continue to fall. 2x6 through 2x10 remain firm, along with 2x12s, 8s through 16s, and 2x12s, 18s, and 20s continue to fall as demand softens. So it sounds like the major stuff, the 2x6 through 2x10, those ones held steady, but the 2x4s fell, and the 2x12 long lengths came down as well. And that's in the Southern Yellow Pine stuff. Let's see here. Okay, Western Spruce Dry Dimension. The market remains steady with some good takeaway being seen. The overall availability of Doug fir in the general is not great. It still seems as if narrows are a little easier to find compared to wides, but there's not a lot of availability out there in general in terms of the Doug fir. That market is on firm ground. I would assume that's probably because a lot of the Doug fir that is consumed here in the United States comes out of Canada. So I'm assuming because of the issues that are taking place with some of the Canadian mills up there in the British Columbia area, which we had reported on, that like mills like Canfor had shut down production until the new year. So there's probably, I'm assuming because of that is the reason why the Doug fir is limited here. Let's see here. I think that was the majority of it. Oh, green dimension. Let's talk a little bit about that. Green Doug fir dimension continues to see upticks in most widths. Most mills order files are out 30 days, plus the wides and specified tallies continue to be difficult to find. So it sounds like there's a bit of a demand going on in the green dimension. The Weyerhaeuser, oh, there was a strike. That's true. The Weyerhaeuser strike at their Oregon and Washington mills had taken significant volume out of the green dimension. So that's probably why we saw such demand for dimension or green dimensional lumber in that. All right. Anyway, that was the lumber letter update. I hope you guys enjoyed that stuff. Personally, what I have seen is not a lot of excitement going into like the new construction market, but there is quite a bit of excitement happening within the remodel, and I don't know necessarily like to call it repair or maintenance, but you know, with the weather being as bad as it is here in Oregon, taking care of your roofs and siding before the winter hits is like one of the critical things you need to do. And so a lot of people had postponed those projects, excuse me, you know, over the course of the summer here, and now it's time to get them done. So that's probably why we're seeing a little bit of an uptick in the walk-in customers, you know, as far as that goes, is trying to do that maintenance before the winter hits. But as far as new construction, I am not seeing a lot of that taking place. There is, you know, projects happening. You know, the contractor service center is busy. There's, you know, there's houses going on. But as far as like a booming, you know, it's not happening. Like that's not the case at all. You know, it seems very sluggish, and I don't know how to say it. It's like it's not the hot and heavy that it once was. Things have definitely slowed down quite a bit. Now, me personally, you know, I feel busier at work, but that's because we had a few people who have just recently left the company. So, you know, when you have somebody who was doing a really good job in sales all of a sudden leave, then all those sales get piled onto the other salesmen. So all of a sudden, I'm just like overwhelmed with doing special orders and stuff like that. I shouldn't say overwhelmed, but I now have a steady flow of these special orders coming in. And that makes it seem busier than it really is. So anyway, what are you guys talking about? Let me go back up and find Matt's question there. Hey, Matt, thank you very much for the $10 super chat, man. That's very cool of you. Lumberjack Landlord. Be sure and check out Lumberjack Landlord's channel, too. Nothing better than a Friday night live from Simon. Appreciate you, sir. Give Simon a like if his hard work has ever helped you. Well, thank you very much, Lumberjack Landlord, Matt. You're very kind, man, with the $10 super chats and the words, man. I really appreciate it. So, hey, all-nighters up in the house. Good to see you, man. All right. Not talking, listening. All right. Maybe you should ask for a raise. No, I don't. I like to earn my raises. I don't like to ask for them. Like, now, there's been times in the past where I have gone to, like, my employer and say, hey, man, I'm taking on different responsibilities here. You know, it'd be nice to get compensated for those things. In that case, I have asked for raises, but as far as just like getting a raise, I try to prove it and make it happen, much like trying to get, you know, the likes on my videos. Like, I mean, I do ask for likes on my live streams, which if you haven't hit the like button, please go hit the like button. But that's so that we can get the YouTube algorithm to grab the video and spread it out there for more people to come into the channel. My typical videos, I don't ever ask for anybody to like or subscribe on those videos, because I feel that if you truly like the video, then you would like it. And if you enjoy the channel, then you would subscribe. And if I don't ask for it and you guys just naturally do that, then it tells me that this channel is meaningful in those numbers. Like, I mean, you truly want to be here if you have hit the subscribe button. You didn't do it just because I asked, because I don't ask. And the same thing with the videos. Like, if you really like the video, I would really appreciate it if you hit the like button. And if you don't, then hit the don't like button. And that helps me out, because if you do like the video, it's noticeable. Like, I mean, it's like, all right, I did a really good job on that. If I can get 1 like for every 10 views, I feel that it's doing okay. So if that ratio goes up to, like, say 5 likes for every view, or 5 views for every like, then it tells me that video did really well. So I really appreciate the likes and the subscriptions that happen, because it tells me that I'm doing a good job and I never asked for it. So all right. I am also in the Pacific Northwest. Go Mariners. Right on. Yeah, I love living in the Pacific Northwest. It's one of my favorite places. You know. that I've ever been. Let's see here. Interest rates will kill off inflation by next year. Then everyone will be complaining about interest rates. The beat goes on. Yeah, I think really what's going to kill inflation is the opening up of the economy, the distribution networks, the just-in-time delivery services, then being just in time and actually being, providing the economy with the goods and services they need. I honestly think the lifting of interest rates is going to be very difficult to try and cure the problem of inflation with, because the inflation was caused more due to a supply chain breakdown, which can't really be fixed with the lifting of interest rates. Now, you can damage and hurt the consumer by lifting of interest rates, but that doesn't actually bring down inflation when you're considering that you need help from the supply side. The supply side would be excited about, trying to actually supply the distribution of all these goods and services if they were excited about a consumer out there. But they're not excited about a consumer out there because the Fed has already said we want to kill the consumer. We don't want a consumer out here. That's why we're lifting interest rates. But we would like help from your supply side. If you guys go ahead and just do that work, that would be great. So you see, like, the confusion that goes on there. I honestly think that the Federal Reserve, in conjunction with the government and everybody else out there, severed the supply chain. They broke the supply chain on purpose to create the shortages that then had the inflation coming behind it. When you create the shortages, you're going to have a demand, and whether you had an increased demand or not, if you have shortages taking place, the prices will go up. And that's really what happened, is the severing of the supply chain. That caused the prices to go up. Now the Federal Reserve is like, thank God, because we really wanted to lift our interest rates and we had no way of doing this. Because the last time we tried to lift interest rates, we had this autopilot thing going where we were going to let interest rates go up a quarter point every quarter for, until they felt that it was no longer appropriate to do that. And that pissed the markets off immediately. They were like, no way, we cannot handle this. And they were able to get their Fed funds rate up to like 2.5% or something like that before they had to, switch it around and, start lowering them again in order to get the economy moving. This time around, they knew that wasn't going to work. They knew that they were not going to be able to lift interest rates without damaging the economy. However, if the economy is already damaged, right, it's already messed up, then you can lift interest rates and say, hey, we're trying to fix it, fix the economy, yeah. They're not. It's not going to work. What's going to end up happening, and here in about a year, is that the lifting of interest rates of the Fed funds to the 2.25%, 2.5%, wherever that is, a year from that is going to have the economy hitting neutral, right? Where they will no longer be stimulating nor, restricting the economy. That 2.5% Fed funds rate will be neutral, right? Is the neutral area. And that will hit the economy, anyway, I don't know, 6 months to a year from now. And when that does, the Fed is going to reverse course, right? Because at that point, the people just will not be able to take the pain. Now, everybody's going to be looking at the current, 5.5 or whatever, 4.5% or whatever they were trying to get it up to, as like the impact to the economy. Like, they're at what, 3% now? They want to get it up to 4.5, maybe 5%. People are going to look at that and say that's going to impact the economy, but that 5% will probably never actually make it into affecting the economy before the Federal Reserve reverses course and drops interest rates down to zero to stimulate the economy. That'll happen during a crisis, whether it's a sovereign debt crisis, corporate debt crisis, just a complete, I don't know, maybe a collapse of the entire currency or something like that. There's going to be some sort of major issue taking place, and the Federal Reserve will step up and introduce that digital currency, that central bank digital currency. And it will be in conjunction with the Treasury. I mean, they will have their emergency special bonds or something like that for the Fed to use. But that's how it's going to end up going down. But until then, they're going to keep the interest rates elevated for a significant amount of time. I mean, I would not be surprised to see interest rates staying elevated for a year, and let that impact the economy, slow everything down. And then once they remove it, drop interest rates down, that's going to be like, gardening. It's going to be like the planting, the sowing of the seeds. Just like right now, it's going to be harvest season for the rich. I mean, all these people who had taken out all kinds of debt to build fancy, beautiful things or buy fancy, beautiful things are going to end up losing that stuff to the rich who have cash to buy up all these depreciated cheap assets when the recession kicks in. I mean, it's the same game they play over and over again. Once that is done and they're done harvesting and taking what they can from the people who lost everything in their life, then they'll lower the interest rates and let the plantings begin, and people will start borrowing money to start building those big beautiful things again that they're going to take from them once they raise the interest rates back up. I mean, it's the same thing. They do it over and over again. So I don't know why this time would be any different. All right, watch the bond market. Absolutely, the bond market is going to be the tell-all of everything. I mean, we're watching that 10-year. Like, I remember when I told people, it was just like, okay, so when the Federal Reserve reverses course and the interest rates start to rise and you see the 10-year Treasury start to get, ever increasingly closer to the corporate debt, then you're going to start seeing corporate debt defaults. People told me then, you are nuts. They will never allow interest rates to rise. The government can't afford it. It will immediately collapse. Well, here we are, right? So we aren't collapsed yet, right? Still could happen, but I don't see it happening, right? I mean, it could. I'm just saying it's not happening yet. And we've got that 10-year Treasury. What was it, up at 4% yield today? Now, that was something that nobody ever thought was going to happen. And I think it's going to go higher. I think we're going to see the 10-year continue to increase probably for, like I said, the next year or so. And it's going to get the dollar to be stronger than anybody would ever have imagined. I mean, they're going to look at the dollar strength and go like, nobody guessed this. And then people are going to be like, well, the uneducated economists and a handful of other guys were saying this was going to happen, and it is happening now. So it's so weird to think, going from this hyperinflation scenario that everybody knew was going to happen. In fact, a lot of people still think is going to happen, to all of a sudden the strong dollar destroys the world, right? All these sovereign and corporate debt defaults taking place all over the world because of the strong dollar. I mean, it's hard. It's very difficult to think that, anything more than just a handful of people believe that was going to take place. But here it is. Corporate debts will blow up big time. Absolutely, they will, Paul. Like I said, when you see that 10-year continuing, the yields on the 10-year continuing to increase, that is going to make it very difficult on these corporations to roll their old debt into new debt. Because, think about it yourself. If you are a fixed income investor, you're looking to put your capital investment towards something that is going to give you a return, a guaranteed return. And corporate debt over the last couple of years, the yields on corporate debt has dropped dramatically, intensely, right? So now it's come way closer to the U.S. Treasuries, this corporate debt has. Now the U.S. Treasuries are starting to increase. So if you are an investor looking to get a return on your capital investment, and you're looking at the risk of loaning money to a corporation, right, who could possibly fail, or you can loan it to the United States government, who is guaranteed to pay, zero chance of default, 100% going to pay, right? So the risk of buying a U.S. Treasury is ultimately zero, and the risk of buying corporate debt is incredibly high. And so when the Treasury yield starts to rise and gets closer to that corporate debt, who would want to own Who would want to own corporate debt? Right? Nobody. So they get out of corporate debt and start moving into the U.S. Treasuries, and the corporations can no longer fund themselves. Not all of them. The zombie corporations can no longer fund themselves, and then they start going into issues where they can no longer make their payments, and they have insolvency problems, and eventually go into default and then failure. They are all on short-term debt, so no. Let's see here. Is corporate debt fixed rate? Yeah, I mean, a lot of it is. And so you also have to think, because a lot of times people, once you have purchased the bond, that, it doesn't change for you as the investor, right? I mean, you're guaranteed that yield, whatever it is that you purchased it at. However, the price that you're going to be able to sell that bond for, that's going to change, right? So you might have purchased it for $100, but then yields go up, right? You might have purchased it for $100 that has a 10% yield to it, right? So you're going to expect to get $10 every year from having the ownership of this bond. But then yields go up, right? Your bond doesn't change. After you purchased it, you're going to get the same, right? You're set on your purchase. However, the investor that is going to purchase your bond, if you decide to sell it, is not going to purchase it for $100 anymore, right? In fact, they're going to purchase it for a little less than that because the yields are rising. So instead of getting the $100 that you thought you were going to get for your bond, now you have to sell it for like, $95 or something like that. You have to take a loss on it. That is where the yields adjust for the bonds, right? So the person who had already purchased it, like all the bonds in your portfolio, they don't change unless it's an adjustable rate bond or whatever, but that stays the same. What you'll be able to sell it for, right, to the next investor if you choose to sell that bond before it matures, like, because you can hold on to it till maturity, you get your capital investment back plus the interest that, from the coupon payments of it. But if you don't want to hold on to that bond anymore and you want to sell it, well, you may not sell it for what you think that you're going to sell it for or what you had purchased it for, or, kind of get what I'm saying from that. You're going to have to sell it for a lesser price to the investor who is seeing interest rates go up and bond prices come down. They're looking at that. They're going to be like, hey, I'm going to give you less money than what you are anticipating for it. And that's the way the yields rise and the bond prices fall. So I don't know if I explained that quite right, but a lot of people, they ask me that a lot. They're like, how come, what does that mean? If I already purchased this bond and the yields rise, what does that mean for me? It doesn't mean anything for you, unless you plan on selling it. But if you're holding that bond till maturity, it doesn't mean anything to you. You're going to get, your coupon payments plus your money back. But if you are going to sell that into the future and interest rates are rising, that's a bad position to be in because the bond prices are falling. It's kind of like speculating on gold, right? I mean, that's the thing that I had talked about with the bonds and the gold, because there used to be this kind of argument between the two investors, gold investors and bond investors. The bond investors would look at the gold investors and say, hey, you're just speculating, you're buying a dumb asset, it doesn't do anything, it just sits on the shelf and it doesn't have an interest rate attached to it, right? So, you're speculating. At least the bond investors, they had a coupon rate, right? So they were going to get some sort of return on their investment by buying this bond. They had to have a yield that it was attached to it. The only problem with it is that the yields had dropped so much on these bonds that it didn't make any sense to purchase them because the return on investment from the yield was so little that it just didn't make any sense to buy these things. Unless you take on the idea that yields were going to continue to drop into the future, that if interest rates continue to fall, you'd be able to sell that bond for a profit. So all of a sudden, these bond investors who used to be an investor because they were looking for that coupon return, that coupon payment, the yield of the return on investment from the yield on the bond, well, that became so low that they became a speculator anticipating that they would be able to sell their bond into the future for a higher price when interest rates came down. So they became no different from the gold investor or the gold speculator out there. They became one and the same, essentially. Well, that's starting to change now because the bond yields are starting to rise. Well, all of a sudden now you can get a return on your investment again. Although it's not much, it's better than it was, right? I mean, shit, the 10-year was at less than 1%. It almost went negative at one point, and now it's at 4%. So that's pretty good, pretty good return considering what it was just a little while ago. And of course, the prices have come down dramatically. Where are people standing in Bitcoin right now? I try to tell everybody what it is that I'm doing, right? Now, I try to buy $50 worth of Bitcoin once a week. I haven't done it for a while, for the last year, because, you guys know that I had to put all this money down on a house and stuff, so I was trying to reestablish a savings and emergency fund and all that other stuff. But $50 a week into Bitcoin, regardless of the price, just dollar cost average into it. And I mean, that's been my play into it. I have no real intentions of making millions of dollars off of Bitcoin. That is not that's not in my view. I want to be in the game. There's been so many times that Bitcoin has, rallied immensely, and I was sitting there watching it. Never once have ever participated in it. So I told myself, okay, that's it. You're going to get into the game now and buy $50 a week, regardless of the price, and just go to it until you have a whole Bitcoin. So that's my goal. I'm not there yet. I'm going to start in again here soon as far as buying. But I'm a believer in Bitcoin. Whether or not it becomes an actual viable currency into the future, I don't know. I mean, I don't know if that would actually take place. If they use a secondary, with a secondary layer system with say something like the Lightning Network, where you can have a blockchain interaction with that blockchain, so you can have faster transactions. then maybe Bitcoin could be, could be used on a daily transaction kind of thing. What I really see Bitcoin end up being used as is like digital gold, like literally like physical gold almost, to the point where like countries, corporations, making major big transactions, they would be the ones using Bitcoin. We, the people, will probably be using something else that's going to be far less like expensive and cumbersome as Bitcoin is. But anyway, that's just kind of my opinion on that. All right. Slot machines are more fun than crypto. Yeah, they probably are. Foreign real estate, Costa Rica. Yeah, I wouldn't mind going to Costa Rica. I don't know about living there, though. I like living in the Pacific Northwest. Money is going into productive assets, so inflation will continue to go higher. Yeah, it's starting to. I don't know if it's had a significant, because that's kind of like, if I'm getting your statement right, it's kind of like the Dr. Lacey Hunt idea of low interest rates slows the economy down. Like, the return on capital investment, once that goes negative, then trying to stimulate the economy with lesser interest rates is really not an effective tool. It does okay for stimulating, like for a short term, like getting high for just a minute, but it doesn't do anything for any kind of lasting effect. And I guess the easiest way to kind of understand that is I use like U.S. Treasuries. And if you can imagine inheriting $1 million back in the early 80s and you had lent that $1 million to the government, buying 10-year treasuries, you would get like, 15% yield or so. You would get like $150,000 a year from lending your $1 million to the government. That was a pretty good return, right? You would be able to buy houses and cars and go on vacation and do all the things that you wanted to do with that. Today, you lend $1 million to the U.S. government, now you'll get like $40,000 a year, which is not that great for $1 million. Like, I mean, and considering like a $40,000 a year average wage, like if that's like a salary, I don't think that's average, but if that was like a salary, I mean, there's plenty of people out there who that's what they live off of, is $40,000 a year. But it's not much, and that doesn't give you a whole lot of room to start spending into the economy. I mean, it's just basically going to, provide you with a living. So low interest rates on the return on capital investment slows the economy down. Higher interest rates and higher return on capital investment gets people to spend that money into the economy, and then you have higher money velocity, and then inflation starts to go up and all that stuff. So okay, moving on here. Let's see, what time is it? 10. This guy, how does this Tinder hot date get out of here? Okay, how do I hide this user from channel? Hide user on this channel. There we go. All right. Where are you at there, Lord Humongous? You're supposed to be taking care of these guys. Okay. What time is it? 5:13. Okay. So I got about another 20 minutes here, guys. Simon, how are you stacking cash and at the same time building a risk asset position, Bitcoin? What's your strategy? So I put cash in the bank. I know a lot of people will probably argue with that one, saying the banks are going to crash soon. In fact, there's plenty of YouTubers out there. It's funny because I laugh at some of the fear-mongering stuff that a lot of other YouTubers put on their stuff to try and get the clickbait. Like, I use clickbaity titles every once in a while, but I try to be at least somewhat descriptive of what the video is going to be about. But, like, these people, get your money out of the bank tomorrow before this happens, and it's just like, okay, I don't know how many times I've heard this, like, get out now, kind of thing. It's just like, whatever. I've heard it a bunch, and not saying that you shouldn't be concerned about it. Like, I mean, that's definitely a concern that you should definitely have. Look over in China. I mean, they have bank runs happening there, and they're trying to keep it like, a media blackout on it. But that happened like through social media. They were like, hey man, we got to quit making our payments and pull our money out of the bank. And they started doing it, and it created issues. However, I plan on getting into, well, I'm not planning on it. I would like to get into real estate at some point, like follow Matthew's lead, the lumberjack landlord. He's encouraged me to take a different attitude towards real estate, and I am really trying to, wrap my mind around what it would be like to have property as far as investment and rental income and stuff like that goes. So, shit, I forgot what I was talking about. Anyway, Yeah, I just lost my train of thought. That was weird. As far as like stacking it. So if you have cash on hand, like you keep it in a safe or something like that, and it comes time to get a loan from a bank and you don't have any proof of where that money came from, it's going to be difficult, right? Now all of a sudden you have to start, coming up with reasons why this cash was sitting in your house and not sitting in the bank. But if it was sitting in the bank the entire time, they don't question it. They're like, okay, great, you got, whatever amount in savings, let's use it. They don't question that. So that's the reason why I'm keeping the cash in the bank, right? And I don't keep it all in one bank. I have several bank accounts, and that's, again, because, staying cautious, to it. All right. It's getting weird with the inflation, Jaws. Yeah. All right. Where did I see? There it is. Not your problem. Thank you very much for the $4.99. Flew and landed at Astoria Airport around noon yesterday, completing one of my dual cross-country requirements. Loved flying over the bridges and coast. Well, right on, man. I saw you had mentioned that in the comments yesterday. Next time you're in town, send me an email or something like that. We might have gone and got a cup of coffee and said, hey, even if it was just for a short talk, My verdict is still out, but I might just be fascinated by the idea of the freedom it could represent. Are you talking about crypto there? I'm guessing you're probably talking about crypto. Let's see here. Paul, will be bail-in this time? Oh. Or a combo of bail-in and bail-outs. Yeah, it very well could be. I mean, if you have your money stuck in the bank and there's a bail-in, yeah, that's the bail-in. That would suck. Because that happened in Cyprus. Like they totally just, like, anybody who had, I forget, it was a fairly significant amount too. Like if you had, like, I don't know, just a few $1,000s, they didn't seize your account. But if you had like $150,000 or something, or $100,000 in the bank, like, yeah, they took money from you, like, straight up. Like, they just took it. Yeah. Okay, keep streaming. I'm coming back to town. All right. Oh, okay. That was my wife. Okay, well, I will. I'll hang out for a little while then. Hey, Simon, I have a rental and it was a BRR. And it was great decision. Buy, rehab, rent, refinance. Oh, I see. Okay. It will be a free house in about a year. Well, yeah. See, now that's the kind of thing, like, that's the kind of thing that you do, right? That's how you make it work, is to, find something that needs to be rehabilitated. It's funny, like somebody told me one time, I was like, oh man, you can't fix that. And I'm thinking, you can fix anything. Like, that doesn't make any sense to me. Like, I build houses. Like, if there's a house that needs to be repaired or something, like, it can be fixed. I don't understand that. Like, everything can be fixed. How much that you want to put into it might be another thing as far as tearing it down and starting over again, but anything can be fixed. All right. Well, what do you of Cayenne West? Cayenne West? I've never heard of her. Let's see here. You can't fix the Fed, though. No, you cannot fix the Fed. I mean, I don't know what it would be that would be fixed about it. Like, what would a fix look like? I don't understand that, because, like, it's not really the Fed's problem to fix something so that you have a decent life. Like, there's people out there like, Fed's doing fine, man. I'm killing it with the Fed's decision, right? So they don't need anything fixed. You need something fixed, right? You need the Fed to fix it for you. Or if I was looking at it that way, I would need them to fix it for me. But I don't look at the Fed that way. I look at the Fed and what's going on out there, and I say, okay, well, there's the issue. What do I need to do with this issue in order to make sure that I can, progress and, be awesome, or whatever it is I want to do. All right. Maybe honestly within the Fed, where we have the best economics that's good for all and not to benefit some. Again, what would that look like? Like, I don't understand quite how that would be, because no matter what you do, there's going to be some people who are going to get hurt and some people who are going to excel no matter what you do. Like, there is no way that you can create a society that is going to be perfect. And even the attempt of trying to go for perfect, Actually, the attempt of going for perfect is okay. Like going for perfect, the attempt is okay. The achieving of perfect is flawed. You can't achieve perfect, because the moment that you achieve perfect, you're going to be in a fight to try and keep it perfect. And therefore, if you are fighting to try and keep it perfect, it cannot possibly be perfect because you are fighting to keep it there. You see what I'm saying? So the attempt for perfect is okay, but achieving perfect is flawed. It can't work. It will fail miserably, because if you are not part of the system that makes it perfect, then you are part of the problem and therefore need to be exited out, right? However that happens. So, in my opinion, there is no fixing this. There is nothing that they can do to fix it, to make it right for everybody, because some people are going to excel and some people are going to get hurt by that. It's your job to figure out what it is that you need to do to make sure you're on the excelling side of it. Yeah. All right. Cayenne West, never heard of her. Sounds hot though. Yeah, totally. All right, material cost for home build is 3 to 6 months. I remember those days of my cross countries. Maybe the removal of the Fed then, since we went downhill after we went off the gold standard. No, I agree with that. Like I could totally go, I'm totally down with ending the Fed. Let's boot them. Let's go. However, you're going to go back to the gold standard. Be prepared for business cycles where people are going to concentrate the wealth into a handful of hands, and then it's going to get redistributed back out to the many again, and then concentrate back up to the handful of people again, and then boom, back out. That's the business cycle. People will grow very big, and people are going to fail miserably during these things. They're going to be short. They'll be quick to reestablish a new business cycle. New businesses will start up, people will prosper very well, and then will fail again, because that's how the gold standard works. The stable prices that exist from a gold standard will be very comforting for people. You can save your money today knowing that in 10 years, the items that you buy will most likely be the same price or very close to it. That is very nice to have a steady pricing, right? That's a very stable thing to have. But the business cycles, I don't think people are prepared for the overwhelming awesomeness of the rise and the dramatic heartbreaking of the fall that will come from that. So, I mean, if you're prepared for that, then cool. Like, save for rainy days. If you know that you're going into a gold standard, there is no saving you, right? You have to save yourself from that. But I think that would work. I would be totally down for that. I'd just be prepared for the business cycles. And that was the whole point of the Fed. I mean, the Fed was, that was, like, that's where they screwed up, because the Federal Reserve was supposed to be an elastic money supply, right? That was the whole point of the Fed, is that when things were heating up, the Fed was going to inject money into the system, because there just simply wasn't enough gold to create enough money to manage all the transactions out there, right? You had a limited amount of money because there was only a limited amount of gold. So the Federal Reserve was going to step in there during the business booms and say, here's all the money you need to make those transactions happen. We have this elastic money supply. And when things cool down, we'll pull that money back out of the system again. This will be, how we work with these business cycles. Well, does that take place now? No. What we have is, when we have a downturn in the economy, the Federal Reserve injects a bunch of money into the system to try and stimulate it. That's not what the Federal Reserve was intended to do, right? I mean, that was completely opposite. I mean, it's completely flipped on its head from what it was intended. Now, I'm not saying going back to what they intended would fix it or work or whatever. I don't think that even the way they intended it was meant to last. Like, everybody who even said, the John Maynard Keynes said it, it was just like, when they asked him, how is this system going to last? And it was like, you only need it to last 100 years, because in 100 years, everybody right now will be dead. So you only need it to last 100 years. In 100 years, they'll figure it out. They'll figure out something else. We don't need to worry about that, because we're all dead. That's literally what they said. I mean, this is part of their theories. It's just like, don't worry about 100 years from now, because none of us will be alive. What do we have to worry about that? Why take out 10K? You can take out 1,600 every day at ATM. I don't know what that. They intended to destroy. We have Rona, yeah. Okay. I would go for no Fed environment, even if things fail, because it will produce a more truthful environment. No, I agree with that. Yes, I do definitely agree with that. I am okay with some pain if everything is more true. Yeah, and I mean, as long as we're prepared for it, the people aren't prepared for it. Like, you are going to see retirees crying on the street. Like, are you prepared for that? Like, we, as people who are focusing in on the economy and things that are happening here, trying to make the best decisions for ourselves, we can prepare for that. We can understand. We can philosophize and think about, like, what it would look like if a Federal Reserve was to fail and what we would need to do to make sure we have these transactions and stuff like that. Most people out there do not think that, right? The only thing they think is, as long as it doesn't fail before I die, right? That's their game plan. It's like, as long as everything holds together before I die, then I'm cool with it. And they have no clue of what they would do in case there is a systemic failure. Like, they don't have crypto backing them up. They don't have gold and silver. They don't have guns, right? That's a scary one, to think that you don't have any guns, right? I mean, if you, that's here. You want a little bit of prepper advice from me? If you do not have a firearm right now, go out and buy a 1022. Go out and buy a Ruger 1022. They're fairly inexpensive. 22 rounds are the most common fire, round that you're going to find in the entire world. You can carry 500 rounds in your front pockets. It is by far one of the best firearms that you could have if you're only going to have one, right? If that's the only thing you're ever going to carry, you can survive with it. You can defend yourself with it. It's not the greatest defending tool, but it is a firearm, so you can kill people with it. I mean, that would be like one thing that if you don't have, I would go out and get that. Like, and then put it in, if you don't even like firearms, just lock it up and put it in the corner. At least you have it, lock it in the closet or something. Good call out, Yui. Thank you. Yeah, well, I appreciate it, man. And thank you for the discussion. That was a good one. Do you reckon material costs for a home build is more or less in 6 months? From right now, I would say that it's probably going to be more in 6 months. Just because I have not seen anything outside of lumber and plywood coming down yet, right? Lead times on windows are still out there. The price of doors is still expensive. There is some price reliefs coming to, like, things like siding, a few of those kind of items. But right now, I think we are at the bottom in the lumber futures price. And if you are looking to pick up a framing package, I think you probably have another month or two before you start seeing the prices moving up. It depends on how much of a turnover your supplier has. If they have a very high turnover, then I wouldn't hesitate on getting a lumber package now, because you're probably only going to have a few weeks before you start seeing the prices ticking back up. They're not going to go up dramatically, so I wouldn't stress that part out. But if you're looking for your best price on your framing package, I would say now's your time. Now's your time. Hey, thank you, John Velasquez, for the $1.99. Very much appreciate that. 007 carried a 22. Mortgage rates are going to 8.5%. Yeah. So what did we talk about? The mortgage rates or the 22? Mortgage rates are definitely moving up. Especially here in Oregon, they seem to be almost to 8% right now. At least that's what I was looking at as far as the average goes. A lot of people had said that once the mortgage rates go up, we would see a housing market crash. I haven't seen it yet, right? I mean, are we seeing a downturn? We sure are. We're seeing the price increases pretty much stopping. Like, I mean, what was it? I mean, they were talking like increases of like 10% every single month, or something like that. It was just ungodly, increases to these home prices. They have stopped going up dramatically, and in many areas they are actually coming down. Now, what I would like to see, as far as for me to see a housing market crash, and a lot of people will argue with this, is that I want to see a lot of the prices coming out first, like a return to normal, and then a drop, right? So, when you buy, if somebody buys a $400,000 house and it goes up to $500,000 in a year, as far as the estimate goes, and then it drops $100,000, that's not a crash, right? That's not a crash. That's a return to normal. But it will be viewed as a crash because of how high the prices have moved to. And it's, I mean, at least that's the way I see it. Now, other people might see it differently. They're like, no, if it goes to 500,000, drops 100,000, that's a crash in the crashing housing market. That might be their case. That might be what they say. But that's what I would want to see as far as like a housing market crash. And these interest rates, they don't seem to be driving it down dramatically like I would have expected, or at least expected from what people were saying was going to happen. Now, I thought a little differently about this. I'm thinking more into the ideas that we have a lot of cash buyers still in the system, and that the interest rates, although are moving up on the mortgages, it makes me wonder how far up they are actually going to go, because you have to look at it from like the market point of view. Like at some point, the people who buy mortgage-backed securities, like those fixed income investors out there, are going to be looking at those mortgage-backed securities going, man, that's a hell of a decent yield, right? And they're going to start buying in. They're going to be like, man, that's my price. I'm going to get in on that. Once they do that, that's adding support to the mortgage market. So where that is anybody's guess. Now, a lot of people were saying, no, once the Federal Reserve steps out of it, it's over. Well, not really, because the Federal Reserve was a buyer of those mortgage-backed securities. Now they're a seller. So it would make sense that you would see the rates begin to rise as they're adding to the pool of mortgage-backed securities that could be purchased out there. So if you have a bigger supply of them and less demand, then the prices come down and the yields go up. But the Federal Reserve could, and they're not saying anything about this. In fact, they're talking about ramping it up a little bit more, or at least not turning it down, the unwinding of the balance sheet. If it did get to a point where the housing market really started to turn, like you see like prices coming down, well, then they could back off on the unwinding of the balance sheet to say, hey, we're not going to be adding more mortgage-backed securities to that pool of mortgage-backed securities out there. And if they're not adding more to that, then the supply of them begins to shrink. And then what happens, right? Prices go up and the yields come down. So they could literally add support to the mortgage market by simply backing off on the unwinding of their balance sheet. They don't have to stimulate. They don't have to say they're going to go into quantitative easing and purchase, do like the purchasing of mortgages. They can just say, hey, we're not going to unwind anymore. We're just going to hold on to the ones we have. Or, and still not be quantitative easing, they can say, hey, not only are we backing off on the unwinding, but then the ones that mature, we're going to roll that into new ones so that we never actually lower our level of mortgage-backed securities. That's another way that they can add support to the mortgage market without ever actually quantitative easing or going into stimulus. So there's a lot of things that are out there that you have to look at, to say whether or not we are actually going to see a crash in housing prices, right? Because a lot of people are anticipating this. They're like holding out, waiting, and I was one of them for a long time, holding out, waiting to take advantage of a dropping housing market, and it just didn't come, right? I mean, not in a significant way anyway. So you could have waited, like you could have purchased last year at 400, or now you're sitting at 500, right? That's a bad position to be in. So how much longer are you going to wait? For me, like, I wanted to wait. In fact, I didn't even want to buy a house. I wanted to sit in 100% assets and zero liabilities. That was the position that I wanted to be in. But I also wanted my kids to live in a house, right? And, the youngest one is 8. So I do have a little bit of time. But how much time are you going to have? Are you going to wait till he's 15 years old and then buy a house so he only has a few years to actually grow up in a house and have his own room and stuff? Or do you want them to be raised with that experience, right? So ultimately, you have to make that decision. Is like, are you going to continue to wait, or are you going to enjoy your life? And then, then you jump in. Kids will send you broke. Man, ain't that the truth, But I tell you what, they're also probably one of the greatest things you can have going on in your life, because it really changes you. Having kids changes you. What the fuck? That was English, but I don't understand. Yeah, I don't know. What was I just mumbling? I get to mumbling in the afternoon. All right. God bless you, UE. Thank you, MC Oz. I appreciate it. I hear you, Simon, but cost to fix house and improve is money. Yeah, that's true, and that's where it's pretty nice having like a job at a lumber yard or a building supply. If you are buying a house or remodeling a house and you don't have like a career path that you're following, Go work at a lumber yard. You get building material. Well, not all lumber yards. Like, I don't think the big box stores do it for you, but like the mom and pop lumber yards, they give you a pretty good discount. You get, usually it's, a certain percentage over cost or something like that. So you can save a lot of money remodeling your house if you work at a lumber yard. Your video earlier today, was that basically about the Great Reset? All the cool kids are talking about. Everyone should watch it. Scary, but I think that is the tragedy or trajectory, sorry, the trajectory we are heading for. Thank you. Yeah, I mean, I kind of went off a little bit on that video earlier today. I don't know, I was just driving back from lunch and just, I don't know, I was in my head, so I just kind of blasted it out there. The Great Reset, like a lot of people are talking about this Great Reset, like they know exactly how it's going to go down. I personally find that the Great Reset, like if it was to be explained easily, is that they are going to take the economy down to a point where it is very diminished, and then they're going to reestablish it on a digital basis. So everything will be tokenized, from commodities to services to our wages to our lives. Everything will be tokenized and will be on a blockchain basis. So that's going to be the Great Reset. And I think that's probably one of the reasons why we're finding that everything is slowing down so dramatically. Like, this zero COVID policy in China does not make any damn sense unless you are trying to actually stop the manufacturing that is happening there. Like, that is what they are attempting to do, is to stop manufacturing in China. And same thing here in the United States, like the Federal Reserve is trying to kill the consumer. So the biggest consumer in the world and the biggest manufacturer in the world has their governments trying to like kill them, right? Trying to, stop them from doing what they do. And if you can get those two major economies to do that, right, to stop consuming, and then the other one to stop manufacturing, the rest of the world will probably follow suit, and you get it down to a diminished amount, like so small and insignificant. Now you have the ability to start changing the way things are fundamentally done. So at that point, get everybody to start going digital. And just saying, if you're going to participate in this system, the central bank digital currencies, you have to have a digital tokenized commodity or service or something, or else you just can't play, right? And then that will go, and the people who don't play, they'll be stuck in trading gold and silver or maybe Bitcoin or something like that. That might be the case. So they'll be stuck in a barter system. Love your channel. Well, thank you. Thank you, Mary. I really appreciate that. You got it. Yeah. Can't forget universal basic income either. That's the pipeline. Yeah, and I mean, the universal basic income is going to come because it's going to be forced upon you to have to stimulate the economy. Once you go negative on the interest rates, there's no real, like, just like Dr. Lacey Hunt's saying, there's no return on capital investment, right? You've gone negative. So there is no, like, investing and getting a return and then using that return to stimulate the economy. That just simply won't happen anymore. So it's all going to be forced stimulus, right? So you'll have this UBI, say you'll have a check or a card or something, it gets loaded up every month with a certain amount of funding, right? You get, say, $1,000 a month. Well, a lot of people would say want to hold on to that $1,000 a month, or maybe invest $1,000 a month. Well, if you have it in a central bank digital currency on a digital platform, tokenized, they can force the direction in which that central bank digital currency can go or not go. Like, you can't buy drugs, you can't buy guns, you can't buy stocks, you can only buy food, you can only buy electricity, you can only buy, stuff like that. And you have a limited amount of time to spend it, right? So this is the way that I feel that the Federal Reserve can continue on with their programs if they go negative and they have this digital currency, is that they could literally force feed money into the people and then force them to go out there and spend it into the economy, whether they wanted to or not. And the only way to do that is with a UBI. Like, it's the only way to really do it, I mean, because you can't, I guess you could have like bank accounts that expire and coupons for stores or something like that. But having cash in the system, none of that. It would all be too cumbersome. There would be no way of doing it. Yeah. Thank you, Jaws, for the $1.99. Really appreciate that, man. Very cool. How do you best profit from the Great Reset central bank digital currency? I don't know. If I don't know. I really don't know. I hope we can figure that out before it happens and we can do that. But I don't know how to profit from a great reset transition kind of thing. Um, I don't know. Once we figure it out, we should talk about that. Digital currency will be zero freedom. Facts. Yeah, and that's where I think like a lot of people should really understand what freedoms are. Like today, I had a discussion with the guy about um, concealed weapons permits, right? Because I'm a constitutionalist and I study the Constitution, I don't believe in concealed weapon permits, right? Now, this is me personally, and I'm not trying to offend anybody out there for the decisions that they have made. There, you might have a reason why you want to have a concealed weapons permit. I personally hear the word concealed weapon permit and immediately hear permission. And I don't ask for permission for things that I already have a right to do. Now, granted, I do not have a right to carry a concealed weapon, right? But I have a right to carry a firearm. And I don't need anybody's permission to do that. Now, here in the city of Astoria, they have an open carry law. It says you can't open carry a loaded firearm. But City Ordinance 5.010 clearly says that the open carry of a loaded firearm is illegal. You can carry an unloaded firearm all you want. Any law that violates the Constitution is not legal. So you can create a law that says you can't have an open carry loaded firearm, but there is no law that says that you cannot carry a firearm. Period. End of story. I don't care who says it if you are in this country. I know a lot of people will argue with me on New York or California, and they'll come up with all these laws and stuff like that. Look them up, all right? The open carry or just the possession of a firearm unloaded cannot possibly be converted into a crime. It cannot, right? If you're doing something with it, and there might be an act or something that's going along with it that will be converted to a crime, but the actual possession of a firearm, unless you're a felon or something like that, right, cannot be converted to a crime. So when I hear people say, well, I got this concealed weapons permit and I still have all the same rights you do. Well, I don't know about other states, but I know here in Oregon that if you get pulled over and you have a concealed weapons permit, you are required to inform the police officer. I hold it to my personal belief that right now there is nothing out there that requires me to say anything to anyone, especially a police officer. So if I have a concealed weapons permit and I would be breaking the law by not responding to a police officer, then that's a violation of my rights, and therefore you do not have it. Double check your concealed weapons permits to make sure that you are not giving up your rights by asking for permission. Okay? That's something to think about. All right. MC Oz 999. Thank you so much. Hit the like button, guys. Simon, will your YouTube surpass your 9 to 5 anytime soon? Yeah, it has. I mean, like those months when lumber was really running up and everybody was like coming to my channel to figure out what was going on, and I'm getting, 60, 70, 80, 100,000 views on a video. Those did better than my day job did. But that's like I mean, the chances of me getting another boost of like a lumber type scenario like that, that's like, that's pretty low. The channel is growing. It's growing consistently. And if it continues to grow, like I could with like, with the savings that I have, and, if I was to be dedicated to making sure that I get at least one video out, if not 2 videos out a day, then I could probably quit my job. But the stability of the job, the information that I get from the job, just giving me something to occupy my day, because like I kind of need that in my life to, like if I didn't have a job to go to, I would have to have an office or something somewhere to go to, right? Because if I'm at home, I don't feel like working on stuff at home. Like I don't want to do work at home. I want to relax when I'm at home. So I need to go somewhere to do work. And I do that. Like even when I'm wanting to study and stuff like that, a lot of times I will drive away from the house and go get a cup of coffee and sit in my car and do, start studying research and do stuff like that. So, I don't know if I would ever actually give up my job. Like I mean, I probably would at some point, but like at this point, I really enjoy having the job. I get health benefits. I get good, I get good discounts for working there. I enjoy the people that I work with. So like, I just don't have any like ambition to quit, as far as that goes. But I guess at some point I could, and I would, like, it would be fun to retire like fairly, like earlier than, so you're still young. Like it would be cool to retire like in 10 years, like when I was 55 or just before I'm 60, so that, and go and enjoy things, like go travel around, like get a camper van and go cruise around with my wife and just cruise the country or something. I mean, sounds fun. All right. Hey, thank you very much, was it Sebastian, for the $4.99 super sticker. Very nice of you. All right. People get bored with channels inevitably. Yeah, that's true. Bravo, UE. You're salt of the earth, brother. Well, thank you. Thank you, man. Let's see here. Yep, not stupid. They're not looking out for us. No. It's boring. What, the channel's boring? Yeah, it kind of is. I mean, we're talking economics. It's not like, I mean, it's a boring topic, right? I mean, we try to make it exciting, but it's not an exciting topic. Talk to cops like you talk to 5-year-olds. No, I mean, if you talk to any of the police officers here in Astoria, the ones who know me, they all say I'm a nice guy. I talk to the police officers. I talk to the county sheriffs. Like I have a lot of respect for them. What I don't talk about is what I'm like, where you been? What are you doing? Where are you going? All that stuff. Like, that's, I mean, I might have a personal conversation with like, Deputy, Rico or something like that. But I'm not going to like, tell him like, where I was earlier in the day or stuff like that. Like none of that stuff is like, I don't give up that kind of information. All right, phone is back on. I'm back on both accounts. Right on. All-Nighter. He's a good guy. I met All-Nighter in Houston. He's a super cool dude. Let's see. Wish the best to you and your family, Simon. Well, thank you very much, Mary. Thank you. Gosh, this dude is back. This Tinder hot date. Get out of here. How do you hide user? All right. Look at this, is like everywhere, man. All right. Delete a message. Okay, ditch Tinder, corn bots, send them the virus. Yeah, I know, man. There's over and over again. All right, love the channel as it is not drama and so real. Yeah, well, that's the thing. I mean, I could come out here, like I try to be entertaining just being me, right? Just come out here and just talk about things and, just give you my opinions and stuff like that and just be me. But a lot of people out there they're not authentic to themselves. Like they're trying to put on this show. They're trying to put on a show that you would be entertained by and, put on this idea of like, this fear, to grasp, because I understand, like fear's entertaining. Like I know it. Like I put out a fear video, like one that, like, your time to prepare is gone. I mean, that video did really well, like, because people get scared and they want to be scared. I don't get it. I mean, I guess I like getting scared too. I mean, there's something fun about it. I don't know. But it's not helpful, right? It's not helpful in trying to understand what is truly happening. You're not making good decisions for yourself when you're based in fear. And then on top of that, when you're living in fear, what you're doing is you're creating an energy within you that is a negative. Right? And that negative energy starts to exude out of you, and then the things that you get back are going to be negative, because a negative will draw a negative, right? So if you're living in this state of fear, you're pushing your energy out to your hands, out to your feet. You're getting into this fight or flight kind of position, and then you will never be open enough to bring in like the positive, the love, the exciting, right? You'll be in this battle, this defensive mode. So if you don't live in fear, you just kind of like, hey man, today's like, what happened? Ooh, that's scary. Well, how do we deal with that? This is the kind of attitude that you have. What you are doing is you are bringing in the positive, right? So you bring that energy back to your center. You're bringing it to your core, right? And this is where you start opening up the ability to start bringing in more positive things to you. And that's literally how it works. I mean, it's all about the way you think too. Like if you're thinking, man, they got the government after me, they're going to kill me, and this is the type of thing that you're doing, you're going to have negative stuff in your life. Like, you're going to wonder why it is that those people over there are so lucky and I'm so unlucky. It's because you're drawing this negative energy towards you, and you're going to constantly get a constant stream of it. Turn it around, watch stand-up comedy, right? And think about the laughs and everything that happened from that. And then, enjoy like a scenery, looking like there's been plenty of times where I'm not feeling well. I will go and I sit right there next to the river, and I will sit on that bench for 10-15 minutes. Changes everything about the way you feel, right? Just find good scenery, or find, even if you don't have scenery to go to, find a good picture of something to look at. These are the type of things that will change the way you're thinking. And if you can change the way you're thinking into something that's positive, the whole world changes for you. I mean, everything does. Believe me, when I was deep into the alcoholism, it was like everything was negative. Everybody was against me. Everything was wrong. Everything on the planet was wrong, and then you quit drinking and you're thinking, well, I guess the world ain't so bad, and then pretty soon good things start happening. Right? Relax on a road trip. UE is a bear adjacent. He gets it. Jump in the river. That river is super cold and about as polluted as it gets. I think it's like the third most polluted river in the country or some shit. It's terrible. And it's not that bad. It's not that bad on the incoming tides. You guys don't get that engine over there? I expect the S&P averaging above 5,000. The LB, that's the lumber spot, over 100, and inflation persistent high of 2020. Stay on the long side. Don't over leverage, and you'll do fine. Yeah, what is it that we're talking about inflation? Because prices are coming down. Like, look at the electronics, look at Walmart, Target, stuff like that, right? Prices are coming down. So people wanted to point at lumber and say, hey, look at all the inflation. And I'm like, well, okay, don't look at lumber, because we know lumber is a supply issue and the prices are going to eventually come down. You got to look at other things out there, right? And so we started looking at all these, electronics that were going up and stuff, and I was like, well, there's a supply issue. We can't get this stuff coming from China. Just look at all those freighters out there, right? So we had all these issues that had a supply chain breaking down, which caused the prices of all these goods and services to go up. But what is inflation? Inflation is the expansion of money and credit. Prices are the results of inflation. Well, what do we have right now? We got monetary tightening taking place. That's deflation. That's the restriction or the constriction of of money and credit. Think about it. Less mortgages being written, less, car loans being written, less people are taking out credit card debt. This is the contraction of the credit that is out there. Credit is money. Money and credit are the same thing. So as the diminishing of credit and the paying off of debt is taking place, that is the destruction of money and credit. That is deflation. Eventually, that is going to find its way into prices, if the supply chain can ever be repaired. Right? So that's my opinion anyway. That's how, that's the way I've seen it the whole time. That was the one reason why I was able to call out lumber as well as I was, as accurately as I did it. Because everybody, I couldn't believe how many professionals out there, professional economists and financial advisors are out there screaming about the inflation and using lumber for their indicator. Was I the only one out there saying, don't do that? Even the people who were saying, we're going to have a deflationary scenario, they use lumber as an inflationary indicator. It was like everybody got that wrong. Everybody did. And I swear I was the only one who said that there was no inflation going on in lumber. It was a supply chain breakdown. And I don't mean to keep bragging that up, but it's if it could happen in lumber, then what's to say that it couldn't happen in everything else out there, right? Not saying that it did happen in everything else. I'm just saying that it happened in lumber, then it's possible for everything else too. Okay. Electronics never went up. No, I don't think they ever did. They just came in short supply, right? They just became less available. But I don't think they ever did really go up. Simon, will demand destruction be a thing in 2023? Yeah, because I think it's already happening now. The demand is already coming out. I guess, like, I don't know, maybe, I don't know what would be the best indicator for it. Cars? Like, like if there's a slowdown in car sales or a slowdown in car loans being issued, then that to me would show like a slowdown in demand, right? I mean, it would happen in a lot of stuff, but cars is like a pretty good indicator of it, right? I mean, if cars are a hot market, then you probably have a pretty high demand, for just about everything out there, consumers. Right? But if the car slows down, then same thing, probably not a whole lot of people out there consuming in other items as well. It's just the car market is just an easy one to follow. Like, how do you like follow TVs? Like, unless there's like a TV index that you could follow. Hey, thank you very much, Tom Annan Bear for the $10. Very much appreciate it. Keep crushing, Simon. God bless. Well, thank you very much. Thank you. I really do appreciate it. You guys are all so supportive. I mean, I love coming out here and talking and babbling, and we got all these topics and subjects that we cover. And you guys are also supportive with these super chats. I mean, it's like the icing on the cake for all this. We need a real uneducated economist. Yeah. I don't know I don't know what it is that these economists out there can do for you that you can't do for yourself, or just having a discussion here on the Uneducated Economist channel can't do. Like, I don't think these guys are as smart as a lot of people give them credit for. I mean, yeah, they have a lot of theories and they have a lot of like tools, like, economic indicators and stuff like that they can follow. But I listen to them speak on CNBC, and I assure you, man, when they're talking, they're using a lot of fancy words, and they configure them, like they articulate it in such a way that it seems very confusing, and that if you're not in tune to, like, the lingo and everything, then it seems like really complicated what they just said. They're dipshits. They don't say a whole lot. They really don't. I mean, literally, they could go on for 5 minutes and say, I believe the Federal Reserve is going to lift interest rates. I mean, like, literally, they could have just done it like that, but they go on for 5 minutes and try and come up with this really, like, smart-sounding speech or something that they're trying to do. I don't know if it's for entertainment value or what, but most of these guys, most of these people that I listen to on CNBC are not that smart. They sound smart. They sound like, even I have a hard time, like, what the hell did he just say? And then I go and listen again. I'm like, oh, well, that ain't important. All right. Electronic chip shortage was huge in the car market. Yeah, it was, right? And I said it then too. It was just like, when you have such a huge, like, shortage of chips, right? And then you hear all these people talking about getting into the manufacturing of chips in order to meet the demand, right? Well, there's going to be a problem with that, because when you start getting into that much production to try and meet that demand, then you're going to go into an overproduction, and then you're going to have a glut, and that's what we're experiencing now. So there's plenty of chip manufacturers out there who are suffering, and they are going to, not only are they losing profits, they're going to start going bankrupt, considering that they had expanded their business to try and meet the overwhelming chip demand that was really kind of falsified by the supply chain shortage, and now they're going to find themselves in a position in which they can just no longer stay in existence because they've overexpanded themselves. I mean, it's going to happen in a lot of industries. It's not just chips. You're going to find it in all kinds of stuff. I mean, give it some time. Anybody who ramped up production to try and, fulfill the overwhelming consumer demand is going to find themselves in a very, very unfortunate position, because that expansion is probably not going to do well. The overwhelming consumer demand was completely fake. It was not real. It was the severing of the supply chain, and then due to allocations, people started over ordering. When people saw that the shelves were empty, they panicked and they started double buying. They saw the prices were going up, and before they lost their money to purchasing power, even if they didn't want the item, they ran out there and bought it. All this combined created that inflation that we are experiencing. The money printer, yeah, okay, yeah, it did have, you can't have inflation without money printer go burr, right? Granted, but that was not the only reason, okay? And it's obvious to me when I looked at quantitative easing 1, 2, 3, and 4, with the hyperinflation scenario that I was expecting that did not manifest itself, I was not going to fall for it this time. And I didn't. It's because it was a supply chain breakdown. I've said it the entire time, and I'm going to stick to that forever. Like, there is no way that you will be able to convince me of anything else. Yeah. But money printer go burr, prices go up. What else do you need to look at? Yeah. All right. Andrew Tate has lumber. Andrew Tate. That guy, I like that guy. I've watched some of his interviews and stuff like that. He gets real he gets real excited about stuff, you know. I like him. He's a cool guy. Make chipless cars. Yeah, make chipless cars. We don't need that. All you need is a carburetor, an internal combustion engine, spark plugs. That's it. You don't need no chips. I mean, no offense to Andrew Tate either. He's a cool guy. I mean, was that the same pickup that passed by? I don't know. There's people park out back here. It's a big parking lot and it's quiet. There's not a lot of traffic that happens back here. So I don't know. People just hang out here. Simple cars, no fancy crap. Yep, I believe that, man. Like, you know, I would love, like, that's another thing. How come Chevy hasn't just given me a Camaro yet? You know how many times I've said Camaro on this channel? Like, I don't know. Anyway, I just figured Chevy would have been like, dude, here's a car, man. Thanks for saying it so many times. Or even Corolla, like Toyota. Like, you know, would it hurt you to just give me a car? You know, I mean, it would be advertised like every single day on this channel, right? Come on, Toyota, Chevy. I don't care. Actually, I like my old car. I don't need a car. But no, I do. I like, you know what's awesome about having this old car is that people were complaining about gas prices, and I'm like, I don't really care. Like, you know, the gas prices don't bother me. I got a little car that just runs, you know, get good gas mileage. But the best part about it is that I don't have to worry about it in the parking lot. Like, I park it at the grocery store, and if somebody ran into it, I probably wouldn't even notice. Like, I wouldn't notice. You know, I mean, it's been sideswiped before. It bothered me for like 30 seconds, you know. I mean, it took the mirror off. I wasn't even going to replace it, but one of the fans sent me a new mirror, so I had to put it on. That's my feeling towards cars. Cars are disposable. I do not, like, you know, you buy a car, you drive it around until it just doesn't run anymore, and then you send it to the wrecker, get your $100, and then go buy another cheap car. That's the way cars should be. Like, they're disposable things. They are not assets. They are depreciating liabilities. They don't do anything for you other than travel. So if a $500 car can do the exact same thing as a $67,000 Camaro, then why would you buy a $67,000 Camaro unless you want to look cool for somebody? And I mean, I guess that would be all right. I don't mind looking cool for people, but, you know, you guys already think I'm cool, right? I don't need a Camaro to look cool. That is the way I am now, disposable. They are. Like, I don't know how many vehicles I have ran through. Like well, no, I guess I did sell one of the Tauruses. But the other one we ended up trading in. The truck I ended up taking to the Suburban I took to the wrecking yard. The truck I took to the wrecking yard. The Aurora I took to the wrecking yard. Yeah, that was all like my recent vehicles. All of them went to the wrecking yard except for not cool, dude. What's not cool? I'm not a cool dude? Probably not. You're right. I like your underpants. Wear them out till your wife tells you to get rid of them. Yeah, that's the way to go. What did you do before YouTube and YouTube changed your life? What did I do before YouTube? I would do anything and everything. Like, I kid you not, like, I mean, before I started the YouTube channel, like, I kid you not, I had my regular day job. I would call bingo, which you all know about. I would do, like, side work, like, you know, landscaping or something like that, if I got the opportunity. And because I had my youngest child at the time, he was, like, 4, I babysitted my friend's kid as well. Because really, it was more like having that kid come over and hang out with my kids, so I had somebody to play with. So, like, yeah, I was babysitting. right? So I mean, literally, that's how I would roll. Like, I would have all these jobs, and I would take on as much as I could possibly do, and that's what I was doing. And then YouTube came along, and I was doing all that stuff plus YouTube. And then YouTube started, got monetized, and it started growing a little bit more. And then my kid grew up, and we didn't have the other kid coming over to babysit anymore, and I don't really do the landscaping thing much anymore. So yeah, it changed my life dramatically. It changed everything about the way I do my life, though. YouTube has changed everything. Quit drinking, start a YouTube channel. All right. Any thoughts on when we might see 5% headline CPI? I don't know. I don't know. I mean, I have a hard time like trying to make decisions or thinking off of these numbers, like especially when it comes to like the CPI. I mean, you go into like shadow stats or something like that, and then after you start reading some of those stuff, you're like, none of this stuff is accurate. None of it's real. And so I don't look at it saying, oh my God, look at it, it's at this number now. I think about like more of the direction that people are going. Like, what are they planning on doing with their money? Like, are they going to save it? Are they going to invest it? Are they going to try and start businesses? These are the type of things that I think about. The Federal Reserve and the inflation indicators that are out there, I honestly think that they make those things up for like arbitrarily. Like, here, just put that out there, or here, configure these numbers so that it says that, and that's really how I think they do it. Like, how many times have you heard them compare inflation today to the way it was back in the 80s? They don't calculate inflation the same way. It's not comparing apples to apples. It's not even comparing fruit to fruit. I mean, it's like comparing like, a ball to a toaster oven. I mean, it's not even like the same thing anymore. It's like completely opposite. And not even opposites, are like not the same. So, and then also add on like the FASB 56 stuff. Like, I don't know if you guys know about that one. I did a video on it a long time ago. I think it's FASB 56. It was like basically the government came out and told everybody that all the numbers that you see, like on the news, the CPI, the Fed's numbers, all that stuff, completely fake. They are 100% fake. Now, they are close enough that they will be accurate for you to make your decisions by. So if you're gonna, you're looking for your investments, your retirements, all the decisions that you're making, the numbers will be accurate enough for that. But for security, national security reasons, we're no longer going to be showing the real numbers. So all the numbers now are completely fake. So if you're watching the news and you're seeing a number flash up there and all the CPI and all that, it's all fake. It's all fake, every bit of it. Now, if it's accurate enough that you can make the judgment by, they say that's the case, but I don't know. Like, FASB 56 made me question that from the very beginning. I mean, you can find it on my content. It was one of the earlier videos I had actually done. It was like, I think that's what I titled it, FASB 56. Legal lies, I think is what I titled it as well, legal lies. Supply and demand only goes so far in a monopoly. The trucking industry had the best years ever in 2020 and 2021. And now this year, 2022, you're going to find that those guys are going to suffer. They are going to go into bankruptcy. It's going to be terrible. It's going to be like a bloodbath for these truckers. One of the indicators that I knew this was going to happen, and I talked about this a while back on one of my videos, is that at work, I will get these phone calls from trucking brokers who are looking to haul freight for us. They want to pick up material and haul it to wherever it needs to go. I have to explain to them, it's like, listen, we are a small local lumber distributor. We have our own fleet of vehicles. We run our own local deliveries. We really don't ship out of the area, right? So I have to explain that to these brokers. Now, prior to the pandemic, you might get 2 or 3 of these calls a week, on the high end. Like, that's how many I would maybe pick up. During the pandemic, when the trucking shortage was at its peak, I didn't get a single call. These trucking brokers were nowhere to be found. They did not call, not once. I got 3 of them today. Just me. Like, I'm not talking about the other salesmen who pick up these calls too, right? They might have got them as well, but I got 3 different trucking brokers looking to haul stuff for us. And that leads me to believe that there is plenty of capacity for trucking out there, that the refusal rates are probably pretty much decimated now. Like, truckers will pick up anything that they have available. And according to some of the articles that I'm reading, especially from Freight Waves, like, if you really want to know what's going on in the trucking industry or the supply chain industry, read Freight Waves. Excellent online publication. One of the best that I found around is Freight Waves. So check them out. All right. I was going to take off, but I guess my wife's coming into town to pick up the boy, so I don't need to jet out of here. What time is it? 6:10 right now. Awesome. Well, let's see. I got my batteries at 43%, so we still got plenty of time. We can hang out here for at least another half hour or so if you like. Truck traffic has dropped a lot near me. Also, train traffic. Yeah, and I would imagine the train traffic is going to take a little longer to come down. Like, I think there's still going to be a lot of demand inside of that. Just because from some of the things that I've read with the distribution hubs being, locked up and stuff, or not necessarily locked up, but clogged up, bottlenecked. So I think that the train situation would probably take a little longer, but it's going to happen too, where they'll eventually, find themselves having worked through all that stuff. And there's not going to be a whole lot of freight to haul coming in behind that because the orders have pretty much fallen flat. That's one of the things that you really look at as far as manufacturing and how well the economy is going to do into the future is the future orders. And that's the thing, like, orders for merchandise have fallen dramatically. During the pandemic, when there were shortages everywhere, orders were constant. Like, they were like they were overwhelmed with orders, all these manufacturers. Now they're not. And if without the orders, then you don't have a business. And you're not likely to manufacture anything if you don't have them orders. And eventually you'll go out of business. That is really the scary part that I'm feeling is going to be coming, because you see it happening now. If it continues, eventually people will lose all the manufacturing altogether. Will go out of business. Only be a handful of people out there making stuff. And then the real shortages will kick in, because the shortages that we experienced was from a supply chain breakdown. The stuff existed. It just wasn't getting through the supply chain. The next time it comes around, it just simply won't exist. Think about that, right? So that's when the real shortages are going to kick in. And, you want to see an inflationary scenario. That's the one that I would be truly concerned about. See, that's when it's going to be during that time that I feel that the Federal Reserve and the central bank digital currencies and the UBI and all that other stuff will be kicking in. And, trying to create that new manufacturing base to get people out there excited about, trying to create these products and get businesses started again. Like, how long that takes to get to that point, I don't know. But that's really what I see is happening. I mean, you can almost see it with the slowdown of everything happening here. It's like they're almost wanting that to be the case, Alright, give it a few months. How many cordless drills does one person really need? I have 5 drills. I have 4 cordless drills. Let's see here. Do you think because of COVID, any economic bubbles will be pushed 8 years out? No. I think economic bubbles. Well, okay. Something funny, we went through a housing crisis. I was prior to the pandemic, I was convinced that we were going to have some major foreclosures, housing market crash. We were going to have an issue taking place. I mean, there was plenty of evidence of it. There was a lot of YouTubers talking about it. It was kind of heading on its way. But then COVID hit, right? Everybody told to stay home. Don't worry about making your payments. Don't worry about rent. Don't worry about mortgages. Don't worry about any of that stuff. You don't have to do that. So that completely covered up all the foreclosures that were going to happen out there. You have to think there's naturally going to be foreclosures within the mortgage industry, right? Within mortgage market. I mean, some people are not going to make their mortgage at some point, right? Lost their job, death in the family, separation, something happened, right? But that didn't happen during the pandemic. Nobody got foreclosed on, right? Or very few. Right? And that was the problem because that concealed the entire collapse. There should have been people foreclosed on during that time, naturally, just occurring naturally within the system. But they didn't get foreclosed on. And now we're sitting on the other side of that, where these people should still have been foreclosed on, but the condition in the environment for mortgages or for real estate benefited them. So like, even if you're out of forbearance, you have to make your payments now. Well, I can't make my payments. Well, no worries. Sell your house for a profit. Not only do you not have to make your payments, but you actually might come out with a little bit more money too because of the elevated house prices. So the idea that there was going to be like a wave of foreclosures got covered up by the pandemic. Like they took care of that problem, no problem. And it almost makes sense because the Federal Reserve knows that they have to have a functioning mortgage market in order to have a functioning monetary policy. So if the mortgage market fails or even freezes up, even the slightest, starts getting to the point where it's like having problems, then they know that they're going to have problems with their monetary policies after that. So it's imperative that they keep the mortgage market functioning. I don't think they really care about prices as much as the idea that if somebody wants a mortgage, they can get one, right? Now, whether or not they can get one they can afford, that might be another question. But it's the fact that there are available out there and that it's not a frozen market. That is probably the most critical part to it. All right. Thank you very much, Nico, for the $5 super sticker. Says, wow, thank you very much. Food is still cheap in Michigan. Well, that's surprising. It's expensive everywhere else. Source code. If a CBDC happens, which it will, they will have UBI intertwined into it. Use it or lose it to help stimulate the economy. Yeah, I very much believe that very same thing. And you have to think, when this starts to take place, like, it's not going to be just like that. It's going to be like very casual, not casual, but very like non-intrusive. Like, you know, it'll be almost voluntary basis. Like, people will ask for it. And then once it starts to make its way into the system, then it'll start to like really ramp up. So like, you might find like a crisis scenario take place with like, I mean, it could happen as something like a natural disaster, right? I think it's going to be more of like a sovereign debt crisis, but it could happen with like a natural disaster. And then there's going to be a certain class of people, like the lower class, right, looking for food stamps. They're going to be like, hey, if you want food stamps, CBDC, right? Oh, you need your retirement, you want your pension, CBDC. Here, you want whatever, CBDC, right? So this is how they're going to start doing it, and people will just ask for it. They'll be like, hey, where's mine, right? And then once they get all the people who will like just take it because they don't really have any other choice or they want it, that'll force the other people into it, because the ones who have joined in on it will start making the system function with it. And then they'll just start wedging it in and forcing out the others. They'll make cash a nuisance. They'll make, you know, anything other than a central bank digital currency a pain in the ass. And so it'll just kind of lead you into that direction. And then you'll be in it. And there will be no other choice. All right. They do the same for the dollar. UBI would kill the dollar. Yeah, it sure will. And it's not necessarily the dollar, but the cash. It'll kill the cash society. And that's like really ultimately what they want in order to have like that major control. I mean, at least with cash, you have some sort of attempt at being anonymous. I mean, you know, they don't really track who has what cash and who gets it. I mean, they do through like bank accounts and stuff like that, and you can do it through marked bills. But for the most part, people out there on the street, they're pretty anonymous when you use cash. Once you get the cash out of the system, that's it. It's all over. There is no secrecy on what it is that you're doing or purchasing or where you're going or what you're doing it with. So that is kind of a scary scenario inside of that part of things. But getting the cash out of the system itself that's going to be pretty difficult. So the way they're going to do it is to introduce that central bank digital currency, and then they'll start making cash a nuisance by charging you a fee to either deposit it or charging you a fee to withdraw it. And since people probably won't deal with a fee, they'll just use the central bank digital currency instead. So, and yeah, I mean, cashless society is coming too. How long it takes is going to be a little bit longer than I think what people are anticipating. What's the end game? Why are they doing this? There is no end game, right? It's all about, I mean, in my opinion, it's all about slavery, right? So there's a handful of people who are the slave owners, and then there's everybody else. And you can either participate and be a good slave, or you can force your way out of the system, and then you don't get any of the benefits of being a slave, like Social Security, Medicare, stuff like that. So the handful of people out there who control everything, once you understand being a sovereign citizen, it really starts making a lot of sense. Like, you know, the whole idea that you are free from government, your name spelled in all capital letters, your corporate identity. If you can figure that out and you learn what the separation between those two are, it would really, really open your eyes to a lot of other issues that are taking place within the country and actually the whole world, where you can see that we are literally a slave society, right? We are slaves. But the best way to deal with the slave is to let them house themselves, let them feed themselves, you know, let them take care of themselves for the most part. But the majority of all their work and effort get concentrated up to a handful of people, right? That's the type of life that we end up living. So that's what they're going to maintain by going into this. It's not an end game. It's a securing of this system. It's securing of their way of life. And there's really not a whole lot that anybody can do about that or changing it. Even if we all decided that we wanted to do something about it, what is it that we're going to do? Like, I mean, what is it we're going to do? These people, they know this game. They know exactly what it is that they need to do in order to keep it functioning to a point that you will remain a slave. Like, I mean, I'm not saying that it can't change. Like, the people could overthrow it at some point, but there's not enough people who understand it or even care enough to believe that it's not a conspiracy theory to do something about it. So since that's the case, they'll always be in charge. I mean, it's sad. We as individuals, as people who do recognize that and, you know, understand that that is something that is existing right now, we have to make the choices that we can best do to try and separate ourselves from that. Holding gold and silver is probably one of the best ways to do that. It is one of the only ways that you can completely separate yourself from that third party. Don't electronics, governments, whatever, doesn't mean anything. If you have that gold and silver in your physical possession, you are independent. You are free. Right? So living that life is very difficult. Right? Trying to say live without a driver's license or bank accounts, or credit cards, stuff like that. It's not necessarily something that I would be excited about doing. Like, I like conveniences. I enjoy having conveniences. But I also understand what it is to be free and having a constitutional belief, like understanding the Constitution, knowing my rights. These are the ways that I try to, you know, separate myself from the slave owners that are up there or even the other slaves that are out there. But for the most part, there's nothing you can really do to change that. All right. Farmland. Pay back debt and stop borrowing and watch it blow up. Yeah, I mean, that is one way. I mean, if everybody just said, you know what, I'm never taking out another debt ever, and all my debts, I'm going to pay them off, and that's going to be it. I'm going to be done with it. Saving gold and silver. Yeah, the system would end. It would definitely not look the way it does now. That's for sure. So, I mean, and that's another thing. That's why I like the central bank digital currency idea, especially when it comes to smart contracts. Because you think about it, like, what are some of the reasons why we even have a court system, right? It's because people failed on their contracts. They didn't fulfill them. And so you have to sue somebody to, you know, make due on whatever it is that they promised that they were going to do that they didn't do. Well, smart contracts can eliminate all that. Like, you don't have to sue somebody to get your stuff back. The smart contract is going to fulfill it one way or the other. So it's like, let me see if I can explain the smart contract in the easiest way I can. A smart contract is like a digital contract, right? Through like a blockchain, central bank digital currency kind of thing. It's a digital contract that says if the horse wins, this person gets paid. If the horse loses, this person gets paid. And when the horse finishes the race, it automatically happens. And there's no decision making by anybody else that happens out there. It just has to occur, right? And so once the event takes place, then the contract automatically, it just fulfills. And there's nothing that anybody can do about it. Think about how much need for courts and lawyers and judicial and all that other stuff. It would basically make them irrelevant. I like that. I like the idea that you can make government irrelevant. If you could do that, I'm on board, right? Even if it's still a screwed up system, I don't care. Like, making government irrelevant would be awesome, And so that's what I think. 100% debt-free here, cost $800 a year in property taxes and 1 gallon of gas, and to get to work all week, an antenna for free TV. See, there you go, man. See, now that's the way to go about it, right? Somebody was just like, again, with the car, why didn't you buy a nicer car? And I'm thinking, yeah, I could, and I could afford a nice car. I can afford a really, really nice car. And I could be cruising around looking awesome in my new car. But I want a new car for like 10 minutes a day. Like, what am I going to do with the car while it's sitting there in a parking lot while I'm at work? Nothing, right? It just sits there. So I don't really want a car. I want a car for 10 minutes out of the day. But what I really like is to go hang out with my family and go do stuff. And if I don't buy a car, then I have cash that I can go do that with. So there's experiences, or there's like looking cool for 10 minutes. What would you rather have? Like, I don't know, maybe some people would rather have the material possessions. I want the experience. I want the experience of hanging out with my family and the kids and, going places and enjoying things, and having new vehicles takes away from that. So you can have a new vehicle or you can enjoy your life. I mean, and some people probably enjoy their life with their new vehicle, I mean, sitting out there in the driveway listening to the radio or something. Good times. All right. Is all the silver being bought in Idaho? Silver is important to high tech we have today. It is. And there's, again, like, I'm not trying to downplay like holding gold and silver. I'm just saying I just never had it be an inflationary hedge. Like, it never saved me from inflation. Right? It didn't do it. Like, everybody said this is a great inflation hedge. It's not. Right? Look at the price of it right now. It's like it didn't go anywhere. It stayed stagnant this entire time. So it didn't work as an inflation hedge, right? I mean, not in my opinion. It didn't. Maybe it did for you. Maybe your timing was perfect on it or something, but it didn't do that for me. What it does do is it provides me with a great insurance policy, right? I can sleep at night knowing that I have silver on hand, that I'm away from the third party, that I don't have to stress about an envelope coming in the mail or an app coming on my phone or something like that. Being completely out of that is a great position to be in, and there's nothing else out there that quite does that like silver and gold does. When it comes to like the demand for the physical metal itself, if I'm right, it's like 50% of all the mined silver, like all the production, goes to industrial use. That leaves, like, okay, they pull it out of the ground 10-1 to gold. Okay, 10-1. 50% of it goes to industrial use where it gets consumed, and there's none left for investment purposes. So now that means it's 5-1 to gold. Really, right? Not 10-1, it's 5-1, because all the rest of it went to industrial use. So there's 5-1 to gold for investment purposes. And a 5-1 gold right now would be what, somewhere around $300 an ounce, if I got that right. Yeah, I would say there's very little downside risk when buying silver and a huge upside potential. But that's an investment thought, and I don't do it for that reasons. So again, insurance, awesome. Van River is real. Okay. Uh, doesn't get recycled either, like gold. Yeah. Silver is never recovered. Yeah. Let's see here. Van down by the river. Yeah. Okay. Debt is emotional. I sleep much better without it. That is so true. I lived from the time that I guess, when did I buy that Ranger? I guess I bought that Ranger when I was like 22. I guess I was like in my early 20s. And I bought that truck, borrowed money to buy it, paid it off. But there was never a time in my life after I bought that truck that I wasn't in debt. Like, never. And when I was 40 years old, like on my 40th birthday, I was 20 something $1,000 in debt, had like not very much income coming in, and alcoholic. Like, I gave up alcohol and said, okay, that's it. I'm going to take care of these debts. I'm going to pay them off. And it was hard. Like, it doesn't seem like this overwhelming amount now, but at the time, it was like all the money in the world. Like $22,000 was like an insane amount of money. Like, it was so much money that it was like, it might as well have been $1 million. It was like this unfathomable amount of money for me to try and make and pay off. I had a hard time coming up with $50, so it was like trying to pay off $22,000 was just like insane. But when I finally made that commitment to it, I'm like, okay, that's it. I gotta get this stuff down. I gotta knock this stuff out. And so I was like, I had moved to town to get closer to work, and I was paying this debt down, and like literally, like I would take $20. Like, I had $22,000, like a $10,000 credit card that I owed. I would go down to the bank and literally put $20 on that credit card. So I heard, put $20 on it. That's what I would do. And I put so much money trying to pay off my credit cards. Like, every little bit of cash, I would not buy anything. Like, I had holes in my shoes and stuff like that, and I wouldn't care. It's like all the money just went to that credit card, just paying that down. And it took me forever. I would put $20, and it didn't seem like it did anything. Like, the number just never seemed to change. It would always be like, it'd always just be the same number. It was like, man, I don't think it's doing anything. Like, I would accuse my wife, it'd be like, you're spending money on it, aren't you? And like, no, I swear I'm not. So anyway, I was saving cash in envelopes, and I was paying that debt down. And I told myself, one day you're going to have these envelopes filled to the point where you can pay that debt off and you won't have any more debt. And one day it happened. I had $3,000, and I had $3,000 left on my credit card. I had paid off all my medical. I had paid off the collection agencies. I had paid off everything. I had $3,000 left on my credit card. And I did a video on it. In fact, there's a video posted here on my channel where I went down to the bank and I handed them those 3,000 or those 3 envelopes with $1,000 in each one, paid off the credit card, and I walked out of there debt free. And man, what a relief. It was one of the best feelings that I have ever had. It was beyond like being a little kid on Christmas Day. It was beyond everything. It was like the whole world all of a sudden didn't seem so ugly. It didn't seem so negative or bad. In fact, things looked better. Like, just looking out there at the trees and the brush and everything, it seemed green, and the coffee smelled good and the people were funny, like everything in my life got better. Debt is a horrible, horrible thing to hang over your head. It is so bad on you mentally that it just drains you, and it doesn't allow you to really open up and become a better person. I shouldn't say that. It probably does for some people. Like, you can probably be fine with it and okay with it. But when you have debt become a burden to you, like to the level that I did, it's not something you ever want to go back on and deal with again, because the relief of it was just so overwhelming. It was so nice. Yep, and I'd like to get that back again. Like, I don't have any debts. I just have my mortgage payment now. I don't have any credit card debts, no car loans, nothing like that. And it's a pretty good feeling. Like, the mortgage is, it's not quite the same as having like a, like credit card debt that doesn't have any, you know. Wow, there's still a bunch of you out here. 273 of you, 269 likes. That is so awesome. You guys are great. Debt slave zombies. Yeah, debt free is one thing, but being completely debt free and owning your house and car outright and paying no rent is quite another, like I do. Yeah, and then again, there's also the argument for taking the, the Kiyosaki way. In fact, a lady that I know here in town, she laughs at me because she was just like, "You're making your mortgage payment. You're silly." She borrows money to buy property, to rent it out, and she never uses any of her own money for any of this stuff. It's Robert Kiyosaki style stuff. She was just like, "Debt is awesome. Why are you doing it the way you're doing it?" And so that's the way she does it. Like, she borrows money to buy properties and lets the properties pay them back. And like, nothing comes out of her pocket. And she owns like tons and tons of property, So good debt, right? Good debt versus bad debt. Exactly. We love your Jewish voice. My Jewish voice? Do I have a Jewish voice? What does that mean? What is this? UE, you say the signal to get out of cash is when everyone is saying get into cash. Feels like we're approaching that time. Thoughts? Not even close. Not even close, man. There's still so many people out there. When they come into my store, they talk about all the inflation that they see everywhere and how prices are still going up and lumber hasn't come down yet. People haven't any clue about a strong dollar. When you hear people talking about the strong dollar, not like the news, not like them people. I'm talking like your neighbor, the cabbie, the guy who has no clue about economics, who says money printer go burr, prices go up. When they're telling you that there's a strong dollar and that you should be in the strong dollar, that's when you should get out. That's when you're done, right? Not when the news is saying it. Because they're going to talk about, there's going to be economists out there who do recognize the strong dollar and see it happening out there, and have to talk about it because it's obvious that it's happening. But most people don't understand that, and they're not going to get it. And when they do start talking about it, that means it's over. You look Portuguese. There you go. Now you're getting it. There you go. Somebody would finally get that. All right. What's up, Logan? So good to see you. Been half a year now. Must be talking to somebody in here. You can't print lumber. Nope, you sure can't. They will give you 18-month-old financial news. Yeah. I love lumber mills. Something fascinating about it, and love the smell of freshly milled lumber. Maybe I should have been a lumberjack. Yeah, it sounds like you should have been. Or at least a woodworker. I mean, you don't have to necessarily be a lumberjack. Hey, not your problem. Thank you very much for the $9.99. Very cool. I no longer go to church because of how controlling they can be. But this discussion reminds me of Proverbs 22:7. The rich rule over the poor, and the borrower is slave to the lender. Think about it. It's all the way back to the biblical days. So why would things change? That's another thing. I remember, anyway, there was this documentary I was watching, and this lady was talking about the average person in Rome, right, during the Roman days. And she was just talking about the daily life of this average Roman, and how they ate and entertained and just all kinds of stuff. Even the public bathrooms. It was pretty funny. They had all these basically these shitters against this wall. You all kind of sit together and do it. Anyhow, there was a tablet that she was reading from that talked about the condition that this man was experiencing. And he had three things that he talked about that were his major concerns. One of them was, what is he going to do if he gets, what is he going to do if he gets sick? Where does he get his next meal? And how does he pay the rent? That was it. So that was his major concerns: food, health, and rent. And this was etched into a tablet from back in the Roman days, right? So nothing changes. None of that will ever change. People will always be concerned about being healthy. There is no way that you're going to create a society in which everybody is going to be healthy, right? You can try and have better health care systems, stuff like that. but it won't solve a problem because it's always been a problem, always will be, right? Where's the next meal going to come from? Right? I don't care all the EBT cards in the world, doesn't solve hunger, right? There's people are going to go hungry. And then how do you pay the rent? What are you going to do if you can't pay the rent? You're going to end up on the streets. You're going to end up homeless. These three concerns will be in existence forever, right? There will be no changing that. I trade options on everything. Ha ha ha. Dave Ramsey's is good for people who struggle with money. I have some disagreements with him on other things like gold, for example. Yeah, I agree with you on that too, because like I do agree with the Dave Ramsey get out of debt, kind of thing. But he is so against the idea of ownership of gold and silver because of the dumb asset. It doesn't have a return. But he doesn't take in the insurance policy from it. It is the only thing that gets you away from that third party, right? So if you dump all your money into some kind of investment, you are taking on risk, right? With gold, there is zero risk. None. Right? I mean, I guess there is a risk in the fact that you may not trade it or sell it for what you wanted, but there is no risk of change. It will always be gold forever. Never, ever will it be anything else. All right. I beg to differ. What do you think about Michael Rupert, who's the Collapse documentary? I don't know. I haven't seen that one, or maybe I have. I don't know. I have to watch it again and give you an opinion. What do you think of the Brics? All right. So a lot of you guys have heard me talk about the Brics many times, but I'll give you the run through real quick. The Brics nations will eventually have a system in which that will compete with like the SWIFT system or the dollar as far as the world trade currencies go. It's not going to happen soon, right? Brazil, Russia, India, China, South Africa, these are not the powerhouses of taking over the world economy, okay? There's going to be some things that need to take place in order for there to be a world reserve currency that is not the United States dollar, okay? Part of that is to have a safe and liquid asset like the U.S. Treasury, and to have a country that is willing to go into enough debt, to go deep enough into debt to provide the world with a safe and liquid asset like the U.S. Treasury. The other thing is you also have to provide the world with the dollars, right? And there's very few nations out there in the world who would be willing to take on the trade deficit that the United States has by importing an insane amount of goods in order to export those dollars out to the rest of the world. So that's a condition that exists right now in order for the dollar to be the world reserve currency. So unless those nations intend on doing something like that, it's not going to happen. Like, they might have their nice little unique pockets where they are doing transactions, and they might even be significant, like say, hey, it's a big one, right? But comparatively to the dollar, it is not even remotely close. Like, nothing compares to the dollar on a world scale. It stands alone. Over time, eventually, the dollar will fail, and something like the Brics nations will take over, but it's not going to happen anytime soon. And if you're making your decisions today based on that, you're probably not going to, I don't know, I don't think that strategy is going to work out very well. Like, I mean, I could be wrong on that, but I'm not taking that strategy. Like, I'm taking the dollar's going to remain strong for the foreseeable future until things, collapse, like utterly collapse. All right. I hope that doesn't happen. Let's see here. I have enjoyed your channel for a long time. Just listening to your thoughts have been informative. Just keep being you, man. I told you that prior to you spoke at George Gammon's convention. Thanks, man. I mean, I really appreciate it. This channel has become really easy for me because I'm just being me. Like, I don't have to come out here and try to put on an act or a show or, be concerned about the things that I say or don't say or whatever. Like, I don't have that kind of concern. I mean, what's coming out is natural. It's me being me. I'm being authentic here. And if I say something you don't like, that's I mean, I say it. I mean, it happens, right? I mean, not everybody's going to agree with 100% of the things that you say, and some people might like seriously disagree with you. But that's not the point of the channel. The point of the channel is to start a conversation, is to be thinking, to, bring in these ideas. And even if it doesn't fall in line with what you were thinking, hey, it might confirm, like, me being wrong might confirm what it is that you have been thinking this whole time, right? I mean, that could be. Or it could be like, hey, man, I think the uneducated economist might be right on this, and I've been looking at this thing wrong the whole time. I mean, these things happen, right? So again, like, how you view the economy is different from how some other guy might be viewing the economy. How you spend your time out there on that river and the way you conduct yourself on your vessel is going to be different from anybody else out there, right? But we're all out there on the river. We're all trying to catch the fish. We're all trying to come back to shore alive, right? So that's the thing about economics, is that we might all be looking at the exact same thing, but we might see it just a little differently from our viewpoint, like from where we're standing, from the positions that we have. Yeah. Okay, let's see here. Bunch of enemies to the people are the loading up on gold. Wait, bunch of enemies to the people are loading up on gold. If most people refuse to value gold over intrinsic value, they would crash. Yeah. Let's see here. Is there another question? Nobody ever agrees 100%. That doesn't mean we can't learn from each other. Absolutely. That is so right. Like, I have listened to videos or listening to an economist talk, and I'm like, man, this guy is not, I mean, I am not jiving with it. I am not picking up what he is putting down here. And then all of a sudden he'll say something, and I'm like, oh, damn, that was a little nugget of information, wasn't it? I better retain that. I'm glad I listened to this, right? Because there might be just one small little piece that you hear, and all of a sudden it just clicks for you. You're like, oh, man. That's what they were talking about, right? So that kind of thing happens. Anytime anybody was ever talking about money, I would listen, even if I thought they were wrong. I'd be like, go ahead, man. I mean, you might say something I don't know, and I want to know. What do you think about peak oil? I don't know, man. Like, I love peak prosperity. Have you ever watched some of this stuff? He had that crash course. That is an excellent piece. That crash course was instrumental in my early days of studying economics. I have to really like give it to Peak Prosperity for that. Dr. Martens. I don't know. Like, I hear these things like, oh, man, we're gonna run out of all this, and then the whole world's gonna start to collapse. Well, I don't know. Like, necessity is the mother of invention, right? Nobody anticipates certain things coming up when certain things happen, right? Like one thing happens over here, and then somebody else figures out how to do it differently over there. I think it's going to be a problem because the world runs on oil. And I mean, essentially, if you think about it, we eat oil. Like, without oil, the food production just wouldn't exist, right? Not in the sense that we have today. So, I mean, when it comes down to it, we eat oil. So it's going to be very impactful, like if oil prices go dramatically high into the food markets, right? So energy costs and food prices can get very expensive. And it's something that I think is going to happen going into the future. It's one of the things that I have said. When it comes to the inflation transitory thing that everybody doesn't believe is happening, but is happening, even though everybody's convinced that it's not. It's happening now. I don't know why they would think that it's not transitory, but everybody's convinced that it's not transitory. So anyhow, once you take those kind of things out of it and you just leave food and fuel out there, you're going to find that those things are going to remain very expensive going into the future. However, if food gets really expensive, what you're going to find is that there's going to be people who want to take advantage of the high price food, and then they are going to start expanding their farms, right? They're going to start expanding production in both equipment and land and everything else to try and produce more food to get paid more money, right? Because this is where the money's at. The problem with that is the overexpansion of these farms. They're going to use debt to do it, and then the prices of food is going to come down, and they're not going to be able to afford their payments for their farms anymore, and then you're going to start finding farmers going bankrupt, right? This is, I mean, I see this all playing out. Like, there's nobody talking about this yet, but this is how the timeline is going to go. And you have to look back in history to see it happening before. World War One, right? And a lot of people don't believe this, right, Adam? I mean, they tell me I'm so wrong on this, but it's a time lag that creates it. World War One had all the European men fighting. They weren't farming, they were fighting. The United States, they were farming, and they were selling food to Europe. And now this created a situation in the United States where we were producing a lot of food, and we started expanding our farms here. We started taking out a lot of debt to create these farms, right, to make a lot of food. Now, come to the point where the war, World War ends, right? Now all of a sudden you have these farmers coming back from fighting, and they're starting to produce their food. The only thing is that it takes a while to reestablish those farms. So even though World War I had ended and the United States was still pumping out a lot of food, they were coming up to a brick wall at some point where Europe was going to start providing them with enough food, and that the farms here in the United States weren't going to be able to export that food to those, European buyers, and they were going to start going bankrupt. And this is where the Depression really started kicking in, and they were telling farmers they had to burn crops and do all kinds of stuff to try and save it. You remember all this stuff? This is all because of that, situation. Like the expansion of the farms to try and provide the food for the Europeans ended up causing a depression here in the United States due to the overexpansion of, issuing of credit and stuff like that to build up these farms. A lot of people disagree with me on that one, but that's how it went down. I mean, there's a lot of other stuff that happened too, but that was, like, to me, that was the major part. All right, it's getting late, guys. What time is it? All right, I'm going to give it another 10 minutes here, and then I'm going to head on home. Thank you all for being here. It's been so nice. It's been a great talk tonight. All right. Boom. What up, Hexicans? What's happening, brother? Hey, UE. CPI has people seeming a little surprised. You've said multiple times it takes 6 to 12 months to see high rates have an impact. Shouldn't an impact be seen roughly June 2023? Well, no, because right now we are starting to feel the impacts of the very first lifting of the Fed funds last year, right? What was that, just after the new year? And so right now we're starting to feel the effects of it. So everything up until this point has been perception. I mean, now obviously there's like the lifting of interest rates, and then people start reacting to that right away. Credit card payment or credit card interest rates go up, mortgage rates go up, all that other stuff. But the actual impact into the economy, the decisions that we make, the transactions that we're doing and stuff like that, it takes 6 months to a year to start taking effect. So we are right now starting to feel the effects of the lifting of interest rates into the economy, right? Up until this point, it's just been that perception. Give it another year, and we're going to have what's occurring right now. What do we have it at? 2 1/4? What is it? 2 3/4? Almost 3%, 3 1/4? I don't even know where the Fed funds is anymore. I haven't even. I think it's 3 1/4? Is that where we're at now? So, yeah, next year at this time, we are going to be in the thick of a very major contraction to the monetary policies. Am I saying that right? So you have like either the Fed funds rate is either neutral, where it's neither expanding nor contracting the economy, or it's above that neutral. And a year from now, we're going to be above neutral. Like still right now, I don't even think we hit neutral yet. And that's what's scary about this whole thing is look how much it slowed the economy down. We still ain't even hit neutral. That's scary, holograms with nothing, with nonlinear optics. I don't know what that is. Let's see here. Do you think we will ever have another depression? I don't know. I don't, but I wonder sometimes. Oh, well, I have to think about like what Janet Yellen was saying, that she doesn't think we'll ever have another recession in our lifetime. And I'm thinking, how is that possible? Like, how can you think that we're never going to have another recession, considering that the United States and the economy goes through a recession every 7 to 12 years? It's gone through a depression 12 times. That there wouldn't be another recession? Like, how can that even possibly be? Unless you plan on fabricating and manufacturing all these recessions. Very much like the severing of the supply chain. Telling people to stay home, don't go to work, don't make your payments, don't do rent, don't do any of that stuff. That was a recession. That caused a recession to happen. It was force fed into us. The only thing is that because it was an unusual and exigent circumstance, right? Unusual and exigent circumstance, gave them the power in order to stimulate the economy in ways that they just simply wouldn't have unless they had an unusual and exigent circumstance. So it seemed pretty fabricated to me. They shut it down. They had the unusual and exigent circumstance. They were able to stimulate the economy, bailed out corporations, right, with the special purpose vehicles. They got the markets to do that. They didn't even have to do it. They didn't even have to print out a single dollar to bail out the corporations. They just set up the special purpose vehicle, told the people out there with the narrative on the mainstream media that they were going to be buying corporate debt. Everybody started screaming at the Federal Reserve saying that, they were picking the winners and losers, and then they didn't do anything. Just that threat alone got the markets to go out there and try and front run the Federal Reserve. They ended up funding all these corporations by buying into their corporate debt, and the Federal Reserve sat back and said, good job, boys, we didn't have to do anything. All we had to do was just say that we were going to do it. This is the type of stuff that they do. Like, that's why I didn't fall for it. People were out there saying, oh, man, the Federal Reserve, this corporate debt buying, and I'm like, no, wait a minute. They said it, but I don't know. Like, this doesn't seem right. And then we studied the special purpose vehicle and then realized, yeah, this was nothing more than a credible threat. They said that they were going to do it. They led everybody to believe that they were going to do it, but they didn't do it. They didn't do it. Yeah. All right. Hey, one more super chat here, and then I'm going to bail out, guys. The infamous NYC. Thank you very much for the $5. Damn, I'll have to run this video back, but I'm sure it'll be good. Happy Friday. Yeah, it is a good one. We were lit up today. I really appreciate it, guys. It's getting dark. It's getting late. I'm going to go home, hang out with the family a little bit before bed. Thank you, everybody, for being here. I really appreciate it. 323 likes, 277 of you up in here, $62 in super chats. So supportive of the channel. I can't thank you guys enough for that. Uneducated Economist. You guys let me know.